I'm Brian Sullivan. Welcome to Trading Nation. We're pleased to be joined once again by Tom Lee, founder of Fundstrat Global Advisors. I'm not a fan of the acronym FANG, F-A-N-G. As viewers of my CNBC show know, Tom, I just try to avoid that. But it's popularized. It's out there, so I'm being forced to discuss it. You were negative on it. Now you're becoming more positive back on the Facebook, Amazon, Netflix, and Google sort of coalition. Are you not?
That's right. You know, in 2016, we said FANG would end with a dang. You know, we thought you were better off buying the laggards, and last year the laggards beat FANG by 950 basis points. But this year we're flipping, and we actually think FANG's going to outperform the market.
By a wide margin or just a small amount? I mean, why so optimistic?
Well, you know, we published a piece today, and we think the upside is as much as 31% relative to the S&P. So that FANG could actually do quite well this year. And, you know, there's a variety of factors, Brian. I'd be happy to go in if you want to talk about them.
Yeah, go. We got it. It's the internet, man. We got all the time in the world.
Okay.
Unlike TV.
Yes. Well, you know, these companies are obviously, you know, category leaders in internet. But I think the things that really struck us was number one, these companies accounted these four companies accounted for nearly 20% of the revenue growth over the last 5 years in the S&P, but they've only captured 13% of the market cap growth, meaning there's still a catch-up on the market cap to how much growth they've contributed to the revenues. And another thing that we looked at was a proprietary way to look at wage inflation pressures, and we found these four companies essentially, it's not the right word, but essentially immune to wage inflation pressures because so much of their value is derived from intellectual property and other things that aren't really going to be affected if wages start to pick up in this country. And believe it or not, since Election Day, companies that are wage insensitive have outperformed those which are wage sensitive by 1,000 basis points. So it's been a huge differentiator just in the past few months.
Do you have a favorite among the FANG? Is it Facebook? Is it Amazon? Is it Netflix? Is it Google? Which is now, I guess it's FANA or FAN because it's technically alphabet, but you know, the acronym sticks.
You know, I would say our least favorite is going to be Netflix because of its exposure to net neutrality. And, you know, that is something we think is going to be really positive for the telecom carriers, the cable and the media stocks, but obviously a risk for Netflix. And I think on the other end of the spectrum, I think what's a really differentiated business model is Amazon. So I might say Amazon might be our favorite, and our least favorite would be Netflix.
All right. Tom Lee was a little more sanguine last year, is returning to be optimistic around the FANG stocks. Tom, we do appreciate it. Thank you very much.
Thanks, Brian.
Thank you. Folks, thank you for watching Trading Nation. Check out the live version on Power Lunch on CNBC. I'll see you there as well. Take care.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.